All right, welcome to today's webinar. Today we'll be talking about trading a trending market. So before we get started, my name is Raman Gill. I am the founder of tradingwithvenus.com website. And just a quick disclaimer before we get started, this is for educational purposes only. This is not advice on any specific trade. So if you have, or investment, if you have any questions related to your own specific needs, please talk to an investment advisor. So in today's webinar, we'll take a look at, first of all, understanding what a trending market is. And then second objective is, how do we actually trade a trending market? What do we look for? What kind of trade setups can we look for? And then how do we take advantage of those trades? So in terms of trends, there are three different types of trends, three different categories that the trends can actually be divided into. First of all, there's an uptrend when the price is moving higher. So the market is moving higher highs and higher lows. And the second type of trend that we see very often is a downtrend, where the market is making lower low and a lower high. So the price is moving down in a more of a stair-step type of formation. The third type of trend is called sideways trend. And in sideways trend, the price just makes a move between two different points as a high and a low established, and price just moves between those 2 points. So normally when we talk about a sideways trend, we call it a consolidation or a range-bound market. So that's not, when we talk about a trending market, we don't refer to the sideways market as a trending market. So today we'll just take a look at a trending market, which is uptrend or a downtrend. Okay, so an uptrend, the definition of an uptrend is when a price is making a higher high and higher low. So if you take a look at this image here, as you can see, the price moved up and then came down. Anytime you're trading, the price doesn't move like in one direction. There's never a straight to the moon kind of setup. We always have a market that goes up and then comes down, goes up, comes down. There's always reversals before the price continues on. So what we get is a more of a stair-step type of trade. And anytime we are in a trade, we need to remind ourselves of that the price will never just go to the moon. It will come down, then go further up, come down, and move further up. So in an uptrend, we have the price will move up, then do a pullback. However, the pullback won't be below the low. So the pullback will be higher than the low that was previously established, and then it will move up further, and then come back and test, come back down in form of a retracement, and that retracement can be lower than the previous high. However, the important thing to remember is that the highs that are being made are higher than the previous high. So this high is higher than this high here, and the next high is higher than the previous high. And also the lows, this low is higher than the previous low, as well as this low is higher than the previous low. So anytime we have higher highs and higher lows, it's an uptrend market. Now, let's take a look at a downtrend. A downtrend is when the market is making a lower low and a lower high. So in this case, the price may have been moving up, and then the price reverses and starts moving down. So now we have a low established. Market pulls back up, as we have seen. It retraces and then comes back lower. So this new low is lower than the previous low, and then goes up again in terms of retracement. However, this high that it makes will be lower than the previous high. So that's the most important thing to remember, that we are making lower lows and lower highs, and then trend is continuing. So anytime the market is doing that, we are in a trending market. So that's the most important thing about, first of all, recognize what kind of market we are in. So when we start trading every day, when we come and take a look at our charts, the first question we need to ask is, do we have a trend? What kind of a market condition are we in? Is it a sideways market or is it a trending market? Once we answer that question, the next question to ask is, what type of a trend is it? Is it an uptrend or a downtrend? So that will give us a guideline within which we can start trading. So now let's take a look at how do we actually trade a trending market. And what we want to do is actually trade the breakouts, the out of the range. So here we have, for example, prices coming down. So once the price breaks this point, so how do we know where the pullback is and when it's going to break? So we'll take a look at how to identify that. So the breakout occurs when the price breaks out of the range, which is the previous point where the price was. Now there are two types of breakouts. There's a continuation breakout and a reversal breakout. So in our breakouts, we'll be talking about continuation breakout type of trade. So before a reversal happens, before a trend gets established, we generally have a consolidation period. So this will be a period of time when the market has been trending and then it starts consolidating. It finds a range and settles into the range. And once the new trend gets established or the trend starts continuing when it takes off again, that is called continuation breakout. So we'll take a look at that. And basically here, as we can see from the picture, we have a range here and we break out to the downside. This is called the continuation breakout. We have a trend established already. Oops. We have a trend coming down and then we consolidate for a bit and then we break out to the downside. So this is the type of trade we'll be looking at today. All right, let's take a look at some examples here. I will go through. Okay, so the trade setup that I trade most of the time with a trending market, I'm going to take a look at these charts and then we'll go to the other charts because those are more current. So let's take a look at these charts. So I call this back test of the trade setup. And the reason that is because anytime we have a new, so as you can see on this chart, this is Euro US dollar 4-hour chart, and this was a chart that we took back in April. This was a really nice continuation trend to the downside. So as you can see up top, right up there, we have a bit of a range. So this is a 4-hour chart. So those are multiple 4-hour candles in there. For a long time, the price sat in this range. So most of the time, this is generally, not always, but generally, we have a consolidation before the price moves out and establishes a trend. Actually, in this case, this is a trend reversal because the trend was going up, but this is a good example. So we have consolidation for a while, and then price starts to break down. And as you can see here, the blue line is the support and resistance line. It's a nice support and resistance line. Price comes and tests this level multiple times and then and rejects it and falls through to the next level and then goes up and breaks down to the next level. And as you can see here, there is a high established and a low that gets established. So the market pulls back, does a back test, and then drops. And this low is lower than the previous low. This high is lower than the previous high. So we know we are in a trending market. So the market breaks through again, comes back and does a back test, and then drops further. So as we can see, the lows that are being made or the highs that are being made are lower than previous highs. So the third high here is lower than the previous two. And the lows that are being established are lower than the previous lows that were established. So now we can see clearly that this is a trending market. However, when you're starting to trade this, you will be here. So you'll be looking at a consolidating market, and then as we can see, we get a pattern, we get a reversal pattern, and the price starts to break down. Now, how do we get into these trades? So what we're looking for is a back test. Like I previously mentioned, the price doesn't just drop to infinity. It will stop, it will do a retracement, and then fall down again in terms of a downtrend. So in this case, as we can see, so our job becomes to look for the points where the price may retrace back to, and then look at trades at those levels. So we have to identify support and resistance levels where we have seen price come and react previously, and look for those places, mark those places on our charts, and watch the price action at those spots. So in this case, we have right here, we saw a big pin reversal. So the price is going up. We threw a big, huge rejection pin into this level and dropped. So we know, and this is on a 4-hour chart, so this is a very important support and resistance line. And as you can see, price had reacted here previously as well. So we know this is an important line. So we'll go to our 4-hour chart, we mark this line up, and as you can see, price broke through this a little bit, however, it rejected again. Once we see this pin, we know that price is rejecting this level. So we can look for a pullback. So we go to a smaller time frame, to let's say a 5 or a 15-minute time frame, knowing that this level has been respected. So we know the price came up here, tested this, and rejected this level. This is a nice rejection here. So we look for a pullback on a smaller time frame and look for a reversal pattern. And this could be any kind of a reversal pattern, double top pattern, or we may have railroad tracks, or any kind of reversal pattern, evening star formation. Any of those patterns at this key level, key reversal level, is what we're looking for. Then we look for that rejection, we look for that pattern, and because we are anticipating a further move to the downside, we'd be looking to get into a trade to the downside. So that's how we would take this trade, and then look for however you manage your trade, you can go ahead and do that. So the next time, as we see the price dropped after that, so that's the trade played out. And the next one right here, as you can see, so basically what we're looking for is, where did price have strong reactions? So sometimes the price will have small reactions, which is fine. What we're looking for is key areas where the price has strong reaction. So every time we see a huge momentum candle, there's generally a pullback. So we have to look for pullback levels. And some of the tools that you can use to identify these pullback levels with your support and resistance will be like your Fibonacci levels. You can draw your fibs from here and look for pullback. So you may see a 38.2% retracement. When the trend is really, really strong, you may only get 23% retracement, or you may get a 50% pullback. So you can have your support and resistance line, look for a confluence of different things coming together to identify those, like pivots, fibs, support and resistance, any of those things coming together. And here, as we can see, this twice on the way up. The first time the price was going up, on the way up, it had a strong reaction in this area. And then the price had come and back tested this. And then as the price was moving through this area got a lot of reaction, a lot of playtime with the price here. So we know this is an important level. And we also know it's an 108, 80-ish level, so about 85, which is very close to the 80 levels. I really like 80 levels. Those levels, I find some of my best trades come from the 80 levels. So pay attention to the 80 levels. So here we have 80 level, we have strong support and resistance. And first time the price comes and tests, this is right where the price was struggling previously as well. And as you can see, we get a big rejection bar. So once we get that, in this case, we see two rejections. This is a very, very good trade setup. Anytime you see two pin bars, those are tweezer tops or tweezer bottoms. If they're in the bottom, I really like trading this. So you can look for, in this case, there wasn't a big pullback, and we see the price drop. So the next time, notice how next time the price comes to this level, it drops again. So we have to anticipate. We can stock these trades. We can look for, wait and watch price to react in this level. And we don't even need to wait for a big pin reaction on a 4-hour chart. We can just go, because we know this level is important, we can go to our 15-minute chart and look for a setup at that level, or we can look at a 5-minute chart for a setup. So get the levels from higher time frame charts and then just stock them on a smaller time frame chart, so you can actually get into the trades up here, anticipating the price to drop. And as we can see, the price dropped again. And the next level that we have here, once the price goes through this is a very nice support and resistance. Notice how price had reacted here, pulled back into this level, then it reacted here again. So look for those levels where price is reacting a lot. And a lot of times what I find is price will either come into the body of the candle or the last pin that you have on the other side of it. So look for your momentum candle to the downside, and then look for the candle to the left of that. That's the reaction point we are looking for. And again, you can look for confluence at these levels. A lot of times there will be other factors coming together to make these levels important. So here we can see the price came and back tested this and then dropped. And 3 times price came and tested this. So the first time we could have taken this trade because we knew this was a strong support and resistance level. We could have looked for a reversal pattern on the smaller time frame to take it. But let's say we missed this trade. Next time, we know this is an important price level because the price had reacted here. So next time, if you miss the first trade, that's okay. We can still go back, and when the price is moving up, we can look for a reversal formation. I don't suggest jumping into trades, like jumping into the price action just because there's a support and resistance level, even though 4-hour support and resistance levels are very, very important. I always like to look for a setup. If there's no setup, there's no trade. And just being disciplined about that, making sure you're looking for a setup to get into the trade. So the setup we'd be looking for is a reversal setup, and we'll be looking to go with the trend, which is to the downside. So we'll be looking for a short setup to go short with the trade. So as we can see here, it came down. And this is where what I was talking about in terms of continuation breakouts as well. So it starts forming a range. It stays in this range for a little while, then it finally breaks through, comes back again, retest, and finally breaks through. So this is how, so basically just look for strong support and resistance areas where price has reacted at, and anticipating a setup or at those levels, and looking for a setup. If there's no setup, there's no trade, so no point in getting into that. But look how price had reacted on the way up here, and it reacts on the way down here as well. So that tends to happen a lot. So that's our 4-hour chart on Euro US dollar. Let's take a look at another example. So this is a pound US dollar 4-hour chart, and this is around the same time frame. This was in April, so the price was coming down at that point. So here we see we have price was going up, then we see a reversal and price starts coming down. So we have this area here is into the candle bodies here is important as well. See how price comes and back test this. So usually you will see a lot of these back test type of trade. So just look for support and resistance and a back test of that, especially if you get a rejection here. Anticipate the second time the price comes around, looking for a rejection, but not getting in till we actually have a setup. So as we can see, price blows through with momentum and usually comes and tests again. In this case, this was a nice, see how price has reacted, nice pin bar here. Again, the price pinned a few times before trying to break through. So this is a nice area as well. It could have tested slightly higher. Sometimes it will test into these candles, but here that's why looking for the setup is important, because if you're, let's say if you're looking for the setup a little bit higher, but the price doesn't get there, that's why looking for this reversal setup on a smaller time frame is important. So we do that. So we mark our levels, look for a setup on the lower time frame, and as you can see, price rejected here. So basically, anytime once the trend starts to form, we look for a pullback and we mark our levels where we anticipate a pullback, and then go to on a higher time frame, so daily 4-hour type of charts, or even weekly charts if you like to go that far, and then look for price reaction at those levels for the trend to continue. Every time there's a move to the downside, generally there's a pullback, so look for those. So that's another example. And then here is, so I talked about identifying or marking these levels on a higher time frame and then looking for a trade setup at the smaller time frame. So this is an example of the Euro US dollar trade that we were looking at earlier. So we have price was coming down, and see where the price had reaction the first time around and it dropped. We're looking for a setup in the same area. So it may not go to, this is 06995, so 0700 level. See how the price doesn't quite get to the same level. However, it only gets to the 80 level. So the 80 levels are very important. See where the candle bodies are closing here? That's what we're looking for, a reaction in the same general area. And sometimes you may see where the price doesn't get exactly to the pip. However, it gets very, very close. And once you start seeing this reversal pattern, see, this is a nice reversal pattern. We could trade the pullback on this. I usually look for this kind of setup and a pullback. Here we see pins into the same level. So we know this level is being held. It's being tested, it's being held, and we could take a trade in here, or we could take a trade in the pullback. Either one of those will be fine, and I would put my stop above these pins. Having tight stops sometimes, especially when there's like a trend going on and a reversal, sometimes I like to give it some room. So I don't mind putting a 20 pip stop on this. So just put it above the pin. So the general idea is put it a few pips above the pins. So if the price does go back, let's say try to do a third push to test this previous high, it could do that. You know, this is not an exact sign. So it could go and do a third push. However, sometimes it may not, because this one here is a double top formation. We're seeing multiple rejections. So we can be fairly confident that we can, if we put our stop loss, manage your risk, don't overtrade, of course, don't take a size that you cannot manage. So put a stop behind here, and then looking to go short on this. So the first target will be this level. So once the price breaks through this level, see how it comes and does a back test of this. This is what we're looking for a continuation pattern. So the price to hold below the previous level here. So the price holds below, then comes and tests it again. And as we can see, it drops further. So here's another test of the same level, and see a nice rejection here. So after this, we can get into a trade looking for the trend to continue. So this is how we take a concept, we mark the levels on a higher time frame, and then we go into a lower time frame, and we're looking for those reversals on the lower time frame to actually get into the trade. So let's go into the current price action. So this is not these are not concepts that just happened, in the past. This is stuff we see every day. So right now, this is the Euro US dollar, and as you can see, it is Friday's price action, Thursday, Friday. So this is last week's, is a daily chart. So each candle is a daily, represents 1 day of trading. So as we can see in this chart, let's take a look at this downtrend. The price has been continuing down for the last few months since October, and we are into December here. It was a nice trend to the downside. So just from fundamentals perspective, what was going on here was that there's a monetary policy divergence between euro and US dollar. Currently, US is looking to raise their interest rates however, Eurozone is actually looking to introduce more QE, quantitative easing, so more liquidity into the markets. And generally, when that happens, just from fundamental perspective, we would expect the US dollar to go up, because we would expect the money flows to go into the US dollars, because they're looking for higher interest rates out of that. And with the euro, when there's quantitative easing, or in any country, when there's quantitative easing, Forex currency prices tend to fall and equities will go up. So just a quick side note there. So we would be looking for the trend here. So the price was trading in this range. This is generally what happens. The price will be trading in this range for a long time, and then finally broke up and tested higher than this previous high, and then did a nice railroad reversal. So at this point, the price tried to fake out to the upside, did a reversal back. So we'd be looking for, and comes back into the range here. So we'd be looking for, especially after this reversal, we'd be looking for price to continue to the downside. So how do you then identify where the price may potentially turn? So one of the ways to do that is look to the left, look to the immediate left, see where the price has reacted previously. And as we can see here, right to the left, oops. So right to the left here, price had reacted. So that becomes a good level for us to look at. And see this pin here? Generally, when you see huge pins right in the middle of something, that tends to be the place where price will react. And as we can see here, price came back up and rejected and then did that a few times. So here what we would do is we'd go on a smaller time frame. We would mark our level on this daily chart. Daily levels are very nice levels. So we'd mark it on the daily chart, and then we would look for rejection in this area on a 15-minute chart or a 5-minute chart, and we'd be looking to trade to the downside. So in this case, the price held here for quite some time. So started forming a tight range here within a larger range. And however, what you can see up top here is every time it got to this level, it rejected. And we know this is an important level, so we could just mark it up there. Every time we see a rejection pattern at this level, we can just sell and look to get out. I usually like to see this look to get out at the same level at the bottom here, the candle that you see. So that would be our, again, it was a bit of a range bound here, but every time it got there, this is a nice level, so we look to sell. Then finally price breaks through, and see how these pins, where these pins are, see where the price comes and back tests again back into these pins. So price has started trending now, and every time it pulls back, the best level to pull back into is we just look to the left and see what the price did on the left hand side, and we expect the price to respect that level. So we won't just get into a trade, we would expect a trade at that point. It may or may not work out, we don't know. However, our responsibility is to, one, identify that it's a trending market, then identify potential pullback levels. And I would most of the time, actually, I mark 3 different levels where I would expect the pullback to happen. So this would be the first level I would mark, and then I would mark these candle bodies are up here as well for the second pullback, and then of course all the way to the top could be the third potential pullback level. So we don't know which pullback level the price will come to. However, we would be ready. We would have these levels marked ahead of the time, and then on our higher time frames, and then we would watch these levels on the lower time frame to see if there's a reaction at that point. So once there's a reaction, once there's a rejection pattern, we're looking to go with the trend, which is the easiest trade to take, is to take with the trend, and we'd be looking to sell in that area. So as we can see here, see these pins into this area to the left, we see the same reaction here as well. So every time there's a pullback, we look for the level. See right here, this was a nice 2 pins into this level, see where the price reacted at. So that's all we're looking for. We're looking for price to drop, and then we mark our potential pullback levels, and price to continue down. So this is a very recent Euro US dollar daily chart example. And then we have the pound here as well. Pound did the same thing. It rejected this very nice resistance level here, threw a pin into it and dropped, and see where the previous pin, look at what the previous price is doing. Anytime you see, especially when you see in the middle of nowhere, there's prices stops, that's usually a good reaction point, and we can look for reaction at those levels. So we would mark this level. We would already have these support and resistance levels marked, and we would look for, on a lower time frame, look for a trade setup reversal at this, looking for price to continue to the downside. Again, here as well, see how pin right here, and see price reacts at the same level. So that's what we are looking for. And now trend has reversed. There's a big candle to the upside, so we're looking for price a continuation to the upside potentially here. However, there's FOMC coming out in not this week, but the next week, so we'll have to be mindful of that. So we may get a bigger pullback ahead of that. We may even see price come back all the way down to here, and reject. See how there's a pin on this side, so we can anticipate. We have already marked our levels here. If it comes back into this level, we'd be looking for a potential a rejection. Bear in mind the fundamentals to see what happens with the interest rate hike. So we'll keep that in mind. Now here's an example of New Zealand US dollar chart. So these are our levels. So price here did a head and shoulders pattern, traded in the range, broke out of it, then came back and tested the same level here. So that's what we're looking for. We're looking for once the price throws this nice, changes, the trend changes here, it goes up, it was coming down, then we saw a reversal. And now we're looking for a trend to continue to the upside because this was a very, very strong daily candle. So we would expect the price to pull back. So we'd be looking for this level here and then this level here for potential pullback. So it reacted here and then came down for a further pullback, and that happens a lot, especially when you have potential head and shoulders forming. So we would mark this and we can see the price broke through. Again, look at the reaction points. There's a lot of very important support and resistance here. Price has reacted. It finally blows through to the upside, comes back and back tests the same level for a continued move to the upside. So that's what we are looking for. We're looking for price to break to the upside, then come back and test the level that it broke through for a continued move to the upside. So that was the current New Zealand US dollar chart. Let's take a look at dollar CAD here. As we can see, the price trend was coming down, and finally we saw at the same level, we saw very nice support here, and price started moving back up. So we had nice reversal pattern. Price rejected here, that nice, very strong daily close. So it'd be looking for a pullback. And generally, when you have a pattern like this, I find the price will come to these pins here a lot of time to back test. So we would anticipate that, look for a reversal here for the price to continue to the upside. And as you can see, finally it broke through and came and test the back test of the same resistance that we were looking at for the price to move through. So that is basically how we look for the trades. We mark our levels and we look for price to come in and back test those levels for a continuation pattern. As we can see, price starts making higher highs here, higher lows, so we know this is a move to the upside. So it's still holding, and the price is moving up.
Continue.
All right, so any questions at this point? Great, so this is all I have to share. This is, again, a general how to trade a trend. So we looked at basically in the training, we looked at what is a trending market. First of all, identifying the trending market, and then how do we take trades in the trending market to take advantage of these opportunities. Everybody has heard trend is your friend. So this is a good way to identify a trend, get into these trades. Those are generally easy trades to take and be profitable. Any questions before we wrap it up? All right. Thank you very much for coming, and I will see you next time.